This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, April 12th. Starting out with the stock index futures, we are seeing higher prices this morning. Much of this linked to better crude oil prices. That was, for the most part, one of the influences yesterday that helped the indices to advance. Also, we did have news that the IMF is lowering their estimates for GDP globally for this year to 3.2% growth from their previous expectations of 3.4% growth. And yet stock index futures are holding up very well. In fact, that news was for the most part ignored. So that has to be viewed as a sign of strength, which we have seen in the last several weeks, where stock index futures do not really move very much to the downside on negative news. Also, earnings for the first quarter are likely to decline 8 to 10%. You would think that that would be a very big negative for the market, and yet, once again, futures not responding to those expectations, with the market holding up very well. In fact, traders on the floor, I've talked to quite a few traders recently, and they are very surprised that the indices are doing so well, even though earnings are likely to show a very weak quarter. So longer term, stock index futures will probably continue to advance at least through the balance of this year. Now, moving over to the currencies, there were good gains in the overnight trade in the pound. This on news that inflation in the UK on an annualized basis came in better than expected, up 0.5%. The guess was up 0.4%. But most of those gains have been given back now as traders center on the political aspects, which remain negative for the pound. Of course, we have that June 23rd referendum for the UK to leave the European Union. So that is the dominant influence, and I think that will be the main reason why we are likely to see lower prices for the British pound. So I would continue to trade the pound from the short side on rallies on any type of bullish economic news. And I think the pound is the one to be trading from the short side. I think on the other currencies I would generally stay away from, with the possible exception of the yen, which is likely to trade higher over the next week or so. I would definitely not be long through the Bank of Japan's April 28th policy meeting, where there's just a possibility that they may do some type of intervention to one degree or another to weaken the yen. Now, moving over to the interest rate futures markets, still seeing a mixed trade, at least from a fundamental point of view. Some supply issues this week, with today the Treasury selling 3-year notes. However, in the gold market, we do like the long side, silver as well. We have seen breakouts to the upside. Also, supply apparently has peaked for the gold last year. So there are a variety of factors that suggest the precious metals will continue to advance. And I would not rule out the possibility that the gold market could reach as high as 1,300 by the end of this year. So anyway, good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.